Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks of the Week. I'm Tracy Reinick, and I'm joined by Kevin Cook. I was a last-minute fill-in for Ben, so if Kevin is referencing Ben, that's why. But I'm glad to fill in because there's a lot of interesting Zacks #1 ranked stocks right now. These are the strong buys, and Kevin has one that's more on the techie side with identity management. But I'm staying with the tried and true on retail because we rarely get the retailers to be these strong buy stocks, and especially the one I'm going to talk about today, which is the Gap. Yes, the Gap is back, ticker GPS. It's back to being a #1 rank after a long time in the wilderness. Let's see, why has it been in the wilderness and what's with this big turnaround in the Gap? Let's take a look at what's going on with its earnings estimates. Okay, so the Gap's got the #1 rank, but this is interesting on the style scores, which I'm going to show real quick here. It has a value score of A because it has been dirt cheap for several years. And now with those earnings estimates being revised higher, it's no longer a value trap here. It's much more interesting story. It's got a B for growth. We haven't seen that in a while. And then the C for momentum, but it means it has an A VGM, which is the top of the style scores VGMs. But scrolling down, I'm going to take a look at the detailed earnings estimates because that's what we care about for the top stock picks. And scrolling down, you can see, how does it get the #1 rank? Well, earnings expected to rise 21.7% this year. Finally, Gap has turned it around and the earnings are going in the right direction. It made only $1.43 last year, expected to make $1.74 this year. Analysts also bullish on next year, another 7.8% earnings growth here, and $1.87 for next fiscal year. But to get the #1 rank, that means the analysts are raising and revising those earnings estimates higher, and we can see that they are. 2 are higher for this fiscal year and next fiscal year in the last 30 days. 7 are higher in the last 60 days. So analysts staying pretty bullish on this one, even though we had the earnings in a couple of weeks ago. And so they've made the revisions off of what was said there. But another way to look at it is in my favorite chart. That would be the price and consensus chart. You can get that on Zacks as well. And you can see what the story is with the Gap and why I'm so surprised it's back to the #1 rank. So shares totally bullish during the pandemic. Then we had the huge, massive sell-off into 2022. It's tried to rally a couple times here in 2023, but you can see this red and blue line. That's the earnings estimate revisions and the consensus coming down because things just weren't as good for them globally as they were prior. And now the analysts cautiously raising. You can see the price of consensus up and to the right. That's what we want to see. That's the optimism of the analysts that, hey, something better is going on here. And what is going on? Well, they've managed to elevate their Banana Republic brand. So we're starting to see better sales in banana now, as they have basically just said, this is going to be our high price product. Then the Gap has had a big makeover and its product is on trend for this summer. So sales have improved there. Let's hope they can keep that up into the fall. Inventories have come down at all of their brands. And as inflationary pressures are pressuring the consumer, a lot of those consumers and those shoppers who want new clothes and accessories are now turning to their other big brand, which is Old Navy. So Old Navy cashing in a bit on their very valuable lower price point. So the Gap also hitting on all cylinders with its factory type stores. And that's another driver for them, especially Banana Republic factory. And so I really like the Gap here. I went into a Gap store recently for the first time in a while, and I stayed in the store for quite some time looking around at all of their new summer product because it was so good this summer. And that is being translated into the shares. Now we can see what's happened with the share price. It has spiked off those 2023 lows, and then it pulled back, and it will pull back on these concerns about the consumer. We got the next earnings report in, it spiked up, and now it's pulling back a little bit again. Over the last 3 months, the shares are now down 8.8%, but year to date, still up about 12% here. But on any of these pullbacks, I do consider this to be a buying opportunity because I do think they're on the right track here. And these kind of tracks in retail, when they get in the right trend and the consumers come back to the brand, usually they stay on this track for several years. So I'm hopeful that's happening with the Gap now too. It's trading at a little over 13 times, so it's still cheap. It does still have a dividend yielding 2.6%. So I'm liking all of that. And again, on any further pullback in these shares, I would be a buyer here. But it's nice to see the Gap back at a number one rank strong buy. Remember, this is the short-term recommendation of just 1 to 3 months, so that will fluctuate. But for now, we're celebrating it at the Zacks number one rank strong buy, because who knows when we may see this happen again. But yes, retail, a place to look for these strong buy stocks this upcoming earnings season. Now I'm going to turn it over to my colleague, Kevin Cook, because he's got the identity management, the more techie side of things, and there's plenty of strong buys in that category.
Kevin Cook here. I'm still in the Northwoods on vacation and working on my Jeremiah Johnson look. My top pick is CyberArk. All right, so who is CyberArk? They specialize in identity security, very similar to Okta, who made their name with, various biometric security issues. And this became extremely important last year. Remember, MGM got hacked when somebody just called in to the help desk and said they needed their password reset, and they broke in and created a massive ransomware problem for MGM. People know that I'm passionate about technology companies like NVIDIA, for science and innovation and education, but I'm also very passionate about cybersecurity, especially because of the way it impacts small and medium-sized business, and I'll get to that in a minute. So you can learn more about CyberArk at their site. There are tons of ways that companies can be breached, and identity security is a key here, whether it's the biometrics, thumbprint, or some type of eye identification. This is such an important area. All right, let's look at why CyberArk is a Zacks number one rank. Let's just go straight to the detailed estimates. This is a $10 billion company and going to cross $1 billion here very shortly in revenues, probably this year. But look at that revenue growth, that top line growth, 24% and 22% projected for next year. It's actually cheap. I picked this stock at $160 last October because on a price to sales basis, it was trading at like 8 times. So now, it's a little over 10 times. We'll call it 11 times, but I still like it. I think it's still got room to grow. Plus, look how profitable it is. 82% EPS growth here this year to top $2, and projected already 64%. So what's going on in cybersecurity that you're getting these kind of estimate projections from analysts? Over a dozen analysts have these projections. Well, big news last month, another big hack. Company most of us have never heard of, Evolve Bank and Trust, gets hacked for tons of customer data. So we've never heard of them. What's the big deal? Well, they're connected to everybody else. They're connected to Affirm, Mercury, Bilt, Alloy, and Stripe. Now, Stripe, that's the one that caught my eye. Stripe is a huge unicorn processing payments for a lot of internet businesses. And so, this just never ends. Let's go to the charts, and then we'll look at why cybersecurity has become such a huge threat of late. So here's a cyber chart, and I'll show you when I recommended this at $160 last year. We made some highs here above 280 in February, and then we're just in this consolidation pattern. But you see we're creeping up here. So here, let's see, June June 27th. That's where my cursor is right now, right on this bar. That's when we learned about the Evolve hack. And a lot of cybersecurity stocks jumped up then. But CYBR is a leader, and I expect them to make new highs very soon and be trading 300. So let's look at the cohorts. We can go to iHack is one ETF. So, and you'll see that iHack is quite a ways from making a new high. So cyber's leading. You could also look at the Hack ETF. Should be roughly the same story, although Hack is getting ready to make new highs, but cyber is leading this. You look at CrowdStrike, Palantir, those are both more expensive. They trade on a much higher price to sales multiple. So I still think cyber is a bargain here. All right, so we looked at those charts. Now let's talk about the threat. I did a special report for Zacks Confidential members back in October that I called the, let's see if I can find the exact title that I gave this because I thought it was pretty cool at the time. Here we go. State of Threat, Cybercrime 3.0, because I wanted to point out that it's sort of a play on words, that a lot of these hackers are so sophisticated now. This isn't some guy in his mom's basement. These are state-sponsored organizations. This is organized crime at the state level with tons of financing and hardware and firepower. Whether they're in North Korea, Iran, China, Russia, the guns are on us, so to speak. So that's why I did this report. If you want a copy of this report, just email ultimate@zacks.com and tell them Cooker sent you, and we can get you a copy of this report I wrote in October, because a lot of the themes that I talk about are still they're still in play, and just Evolve is just a new name for the latest high level hack. Now, the reason that I get passionate about this and this upsets me is, well, first of all, after I did that October report, I got hacked in December. Right after my birthday, I got hacked. My bank account got hacked, and wires went out of my account. 3 wires for $1,800 each. And it took me a long time fighting with the bank to get that back, because what happens here's the thing. There's something called the Electronic Funds Transfer Act. And that has a loophole in it where banks are not liable if somebody hacks into your bank account and sends out wire transfers. The banks are not on the hook. I won't mention the bank I was dealing with, but it was a large money center bank. And to them, I'm nobody. And so I fought with them for a long time. They treat you like you could be complicit. And so, I basically, my password was changed without 2-factor authentication, and somebody was able to go in and send wires out, and the wires went out within 15 minutes. Even if I had seen the text that, hey, did you change your password? Did you initiate these wires? There would have been no time, because they went out within 15 minutes of the bank notifying me that my password had been changed. So this is what's happening. I finally got my money back, and it wasn't a big amount of money. It was less than $10,000, but it was the idea that it could happen so easily, and that the bank thinks that you could be complicit in the crime, so they're investigating you. You have to. So the burden of proof is on you to prove that you didn't do it. But it was just the stress too. Mostly that was the biggest cost for me, was that the stress and the worry and can this happen again? So in part of this presentation I did, State of Threat, Cybercrime 3.0. I made some good slides here, but one I want to show you in particular, there's a cybersecurity firm called PurpleSec, and they do research, consulting, analysis, and they may actually have a cybersecurity product that I'm not familiar with, but I think they're a private company. Look at some of these stats. There was a 600% increase in cybercrime since the beginning of the pandemic. This is when things got super heated and more sophisticated. 350% increase in this rate of ransomware attacks since 2018. But this is the one that bothers me the most. 60% of small and medium-sized businesses go under 6 months following a cyber attack. That's just heartbreaking to think about, that one of these hacks for a small or medium-sized business could take them down because they can't recover from it, because look at how things spill over. Like I said, my hack was less than $10,000. Well, what if it had been $100,000 and then it impacted all my credit, and other aspects of my life or business? You could easily see how this could take out a small business. So that's, the threat actors don't sleep. They're not going away. Cybercrime is just going to get more sophisticated. So that's why we need companies like CyberArk. Thanks for joining us in our weekly top stock picks, which you can always find on Monday or Tuesday every week. And for more free Zacks content, research, data, and a look into our proprietary earnings model, check out our weekly promos, zacks.com/promo.